Hello everyone, my name is Dan, and in this video I will share with you how to identify very important institutional levels. So if you're interested, let's hop right into it. Alright, so what are these institutional levels? Well, essentially, these are levels that hold a lot of volume. What do I mean by volume? By volume, I mean zones where a lot of orders have been placed in the market. Orders placed by us, orders placed by institutions, banks, and because of that, those zones, I like to call them institutional levels, are levels where price could reject from. Okay, essentially there are points of interest. Now, how can we identify these levels? Well, there's actually a very cool tool here on TradingView, and we can enable it by going on indicators and typing in session volume. Okay, session volume profile, it's this first one. You click on it and then you just leave the settings at default. Okay, let me quickly enable it. And as you can see, this red line shows me where the biggest volume is in this current range of the market, okay? And of course, you can use this indicator on any pair. Now, what I usually like to do is to draw a rectangle around this line right here, around this point of control. That's how everyone likes to call this line, the point of control, okay? This is essentially the zone where the biggest volume was in this range, okay? So now, why do we like to use this tool? Well, it's essentially a very good confluence, okay? You can add this to your strategy, or you can even create a strategy based around this tool, because you know that if this zone is a point of interest and has a high chance of rejecting, then when price approaches this area, you know, because it has a high chance of rejecting, you can either go on a lower time frame and look for a possible entry, or you could also have a buy or sell limit type of strategy, you know. But of course, I would recommend you to go ahead and backtest it and combine it with other confluences like market structure, supply and demand. That's how I personally like to use it. Combining it with supply and demand, and when I have a supply or demand level that I would like to trade, and then I see that this indicator aligns with that specific supply or demand level, that's an extra confluence for me that that level might hold. Okay, so it's a super cool tool in my opinion. And now let me show you this example right here. Okay, so we drew a rectangle around this point of control because this is the area with the most volume. Now let's play the market using the bar replay, and boom, check this out. The next day we formed another point of interest. Okay, in the next day this was the zone with the highest volume, so we can draw another rectangle right here. Okay, and we can see that price rejected from it, so very easily we could have placed a sell limit based on this point of interest. We can also see, if I quickly disable the tool, we can also see that we had a very valid supply level right here, very beautiful, that has imbalance as well. So we could have literally placed a sell limit on this supply level, stop loss right above it, having the confluence of the volume. Okay, and let's see how this would have played out. Boom, very beautiful, very beautiful, going towards this next point of interest, of course, again based on the volume tool. But on this one, of course, we have a valid demand level right here, okay, that we can trade. This is the one I'm talking about. Okay, let me quickly adjust it. Okay, we have imbalance on it. As we can see, this is the valid demand level. Okay, and there's two ways we could trade it. We could either place a buy limit on it, or we could wait for price to get into this zone and then scale on a lower time frame and look for an entry. In this case, I'm going to actually go on a lower time frame and show you an example, see if we can find a entry. But before that, I wanted to let you know, if you want to see the SMC trades I am taking every single day, you should go ahead and join my group on Telegram. It's the first link down below. Feel free to check it out. Now, like we see, we have a wonderful reaction to this zone. okay, to the supply level. And now we are going towards this demand level, okay. Boom, take profit would have been smashed right there. Now, since we approached this demand level, let's go on a lower time frame like the 1 minute, and let's look for a change of character. And after that, we could look for a possible buy. Let's see if we get it. Price seems to be gone already, so I'm not sure if we are going to get. Oh, look, check this out. We have a change of character right here. So this could be a possible entry, change of character. Okay, 2 breaks of structure in a row. We've learned that the video from last week. Okay, if you haven't checked that video out, make sure to check it out, and also make sure you are subscribed to not miss out on future videos like this one. And we can see that we also have a demand level right here. Okay, so that could be our entry level. Okay, this one wouldn't hold, so that could have been a loss if we would have picked that as our demand level. But now let's continue and see if we have another possibility to enter the trade. Again, we have another change of character right there. Let's see if we get a retracement. And again, this would have been a stop. But again, we have another change of character. So let's see if this time we would have got tapped into. And looks like we did. Okay, so let me tell you where we would have entered this trade. So right here, after we would have got stopped out twice, again, I mean, right here we would have got stopped out because my stop loss would have been right below this low right here. But now we formed another change of character. Okay, we formed another change of character right here, liquidity grab. And after that, we broke structure to the upside. And then we just look for a demand level, and we have this beautiful demand level right here. Okay, and this could be a very valid buy limit zone for us to get into. The third one, we had 2 stop losses in a row, but now this would be the third example. Maybe this one would be the winner. Okay, so let's see. Let's play price forward. We tapped into this demand level, and now let's go on the 15-minute and pick a target. Okay, so as a target, we could pick this high right here for a nice 1-to-5 risk to reward ratio. If we want to be more aggressive, we could also aim for this high right here because we are in a uptrend. Okay, but let's use both scenarios. Let's say we open a trade and we split the risk in 2. Okay, the one of the trades, we will aim this high right here for a 1-to-17 risk to reward ratio, which of course is really good. And for the second one, we would aim this high right here for a 1-to-5. Okay, let me quickly adjust the stop loss for this one as well. And the take profit would be here for a nice 1-to-5 risk to reward ratio. Okay, so let's play the market. And as you can see, this would have been a fake out because before the big push to the upside. Now, if we go on the 1 minute, yeah, this was this was exactly during some high impact news, because yeah, it was at 3:30, which is 1:30 p.m. UK time, and that's when some high impact news dropped. But essentially, this was a very valid level. Now, of course, you could have closed some partials along the way. This would have been a nice 1-to-4 right here. You could have also moved stop loss at break even. That's something that I always suggest. But overall, you can see that this level right here was a very good level where price rejected from. Okay, and now of course, if we would have used the first example that we used for this supply level right here, where we literally would have just placed a sell limit on the supply level, okay, we could have placed a buy limit on this demand level, knowing that this is where the biggest volume was in the market for that specific session. We could have placed the buy limit on the demand level, stop loss below it, and then again, as take profit, we could have aimed for a new high, and this would have been a nice 1-to-2 risk to reward ratio, and the target would have been smashed. Okay, but again, this video is not specifically for a strategy. This video is about the volume in the market and how to identify these important institutional levels using this very cool tool. Okay, that being said, I really hope you all enjoyed this video. Make sure you are subscribed to not miss out on future ones. Feel free to share and like the video. That will be very much appreciated. And as always, if there's any questions, any ideas, please make sure to drop them down below. Until next time, a very cool video on market structure will pop on the screen right now. Make sure to go ahead and watch it because I really share some cool secrets that will be very, very helpful. That being said, I want to wish you all the best and take care.